Welcome back to Real Estate Mindset. Today's video is gonna be absolutely bonkers. Now, the data is in, and price drops continue to spread to metro areas around the nation. And not only are mortgage rates back up, but so is inventory, especially on new home builds. Now, new home builders are the biggest at risk of going bankrupt, along with mortgage holders. And deep dive into a Redfin article titled Housing Market Update: More Sellers Retreat Amid Falling Prices, Volatile Mortgage Rates. Now, I have a really important question that I would like to ask each and every one of my subscribers in a bid to try to get to know you guys more. Now, my question is, what is your favorite childhood game? Do me a favor and comment below. I want to learn more about you guys. My favorite childhood game was Monopoly. But other than that, you guys remember, I'm not a financial advisor, even though my bio is as a realtor, loan officer, and instructor in all things real estate in Texas. And if you guys can, for my efforts, just like this video, subscribe if you haven't, comment below, and let's get started on this article and the data review right now. Now, here's going to be the meats and the potatoes of what I have to read. And I want you guys to do me a favor. After you're done commenting what your favorite game is, I want you to comment after I'm done reading this article and tell me if you guys think this is over optimistic and if it's increasing the fear of missing out on the buyer side. And I really want you guys to be genuine with your opinion. So comment below when I'm done reading it and let me know your thoughts. Here we go. New listings of homes for sale fell 50% in the 4 weeks ending August 21st, the biggest annual decline since the start of the pandemic, as there were fewer sellers and buyers in the market due to rising mortgage rates and economic uncertainty. As a result, the supply of for-sale homes fell 0.6% from the previous 4-week period. Though that's a slight decline, it's only the second time total supply has dropped from the prior 4-week period since February. The first time was last week. The group of homeowners putting their homes up for sale is partly a reaction to reduced demand and falling prices. Those who are listing their homes are starting to price in with lower demand. The median asking price of newly listed homes dropped 5% from the record high set in May, and sale prices dropped 6% from the record high set in June. The share of for-sale homes with price drops have leveled off after rising throughout the spring and early summer. And this is what I'm interested in here. It hasn't really leveled off. We're about to see, okay? But let's finish the last of this. Sellers are coming to terms with the fact that volatile mortgage rates have dampened demand. Some sellers are pricing lower, and some homeowners are staying put because they're nervous they won't get a good offer, or they're hesitant to give up their low mortgage rate. Because the number of homes for sale is no longer rising, buyers' newfound bargaining power is reaching its limit. It's worth noting that early demand indicators such as tours and requests from help from agents are elevated from their June lows and remain steady. Do they remain steady? Do they really? So there is a pool of interested buyers out there, but sellers need a price fairly to attract them. If more sellers and buyers find the middle ground on price, we could see sales straightening a bit. So again, I'm going to reserve my opinion, and you guys know how hard it is for me to reserve my opinion because I am over opinionated. But do me a favor, okay? Let me know your take on this article, and you can wait to the end of the video once you guys see the data, because I'm going to bring up a lot of visualization of data. We're going to go over the data, we're going to go over charts, we're going to go over inventory, we're going to go over all these things. But again, let me know if you think that that article, the way it's written, is over optimistic, and if it's adding to the fear of missing out from the buyers. Because what I'm hearing is our bargaining power is somehow diminishing, even though this is all just beginning, even though the trends are actually showing that we have now started the housing market crash. Not in every metro area. Not in every metro area, but it's got to start somewhere, obviously. But now let's jump back into the leading indicators right now so that we can look at the week over week data and see where we're at. Okay, here's the leading indicators. And you guys know I love Redfin for doing week over week comparisons, right? But not only week over week, they do YTD and year over year as well. But I love the week over week comparisons. So I'm just going to go through this, guys. I'm not going to read this word for word, but essentially what's going on here is rates have shot up. Rates, again, the average rates, and it's probably going to be higher this Thursday, is 5.5%. So purchasing power took another hit last week. Online searches. So online searches are actually down 16%. Also, demand. Demand is down year over year, 12% still. Here's a big one, touring. Touring activity is down. 6 plus 12 is down 18% year over year. Mortgage applications, this is a big one, down 21%. That's huge. Now, here's what I really like to go over, guys. Now, look at this. The median home sales price, not listing price. The median home sales price is down 6% from the record high of 394,000. So we are down 6% from sales prices now. 6%, and year over year average is now only 6%. This year over year comparison, you guys, is dwindling. There is only a matter of time before we start seeing negative year over year comparisons, but we've already have our first two metro areas, again in Oakland at 0.5 and San Francisco at year over year price decline. Again, year over year, not month over month, year over year, 3.9%. You guys, these are all the trends that we need to pay attention to really get a better understanding of how this housing market is going to crash. In fact, the only thing that those trends were missing was inventory. So what I'm going to do is I'm going to pull up another chart from Fred that's actually going to show you guys the inventory for new homes. And not only that, it's going to show you that we have more inventory for new homes than we did right before our last housing market crash, which is astounding to me. Take a look at this graph right now. And you guys, I'm gonna pull up some visualization of the data I just went over, but first I wanted to cover inventory of new homes because I didn't really cover that. But here's the Fred chart right here. This is a monthly supply of new homes in the United States. And as you can see, we are almost at 11 months. Okay, this is as of July 2022. We are almost at 11 months of new home supply. And to me, that represents a clear transition to a buyer's market in new homes. And it's only a matter of time before resales actually get there as well. But what I want to show you is this. Look, it's at 10.9%. Now look, at the height of the recession, that means we're already in crash mode, right? At the height of that recession, the supply was 12 months. So we are almost at the supply we were at the worst of the last recession. But I want to point out this right before the recession hit. Okay, look at this. December 2007, right before the recession hit, we had 9.6 months of new housing supply, which means we have now more. Because look at, where's the confirmed recession? They haven't even confirmed the recession yet. We have more inventory right now than we did right before we went into recession. Isn't that insane, you guys? 10.9 versus 9.6. So we have 1.3 months more of inventory than we did right before we went into the worst housing crisis in our history. Think about that for a second, right? This data is crazy, you guys, because it's so conflicting. And again, remember why it's conflicting. And this is why we have to use so much logic when we're reviewing this. It's so conflicting because of the trillions of dollars that smoke screened all of the data. There's trillions of dollars. Where's the money? Where'd that money go, right? A lot of people are broke. Where did that money go? I don't get it, you guys. This is absolutely crazy. But what I want to do now is let's go back into visualizing the data that we just went over. Take a look at these charts right now. All right, so we are back to Redfin. Now, here's the median sales price, and you can see here's the peak in June. And here's what I want to show you guys. Basically, that this trend is continuing, okay? We're still above 2021 and obviously 2020 down here, but this is trending downwards. These are prices, right? These are sale prices, not listing prices, you guys. This is a big deal because according to this chart, we are 6% down from our peak. In order for me to win, because remember, I'm renting for like 2 years, so I'm dropping like $55,000 and wasting rent. I need house prices to go down 15%. So we're about halfway there already. But again, remember, you guys, this is a nationwide average. Obviously, this is all about local market, and I just so happen to be in Houston where my local market is melting down. But look at this trend. Sales prices are trending downwards. We need a little bit more to go before we get under 2021. And I believe it's possible we get under this by this year. Maybe October, November, December, I'm not sure, but keep your eye on median sales price. Let's look at the next chart right now. So here's the median asking price, right? So like listings, right? So look at, again, We peaked, I think here we peaked around May, I believe. And look at, again, trending downward. Okay. It's downward trend, right? And again, they're going over year. I don't like that comparison, but nevertheless, because it doesn't tell us it's trending downwards, it just appears to be up, right? But the reality is, look, it's trending downwards. Now, again, it's not under or near 2021 or 2022. So I'm not saying it's time to buy, but you guys, it has started. Okay, the crash correction, negative equity growth has started. Let's look at the next graph right now. So here's homebuyer mortgage payments, and here's what I wanted to show you guys. So again, July, we trended downward. So from here to here, it was a nice little downward trend. You know, more buyers went to the market. Actually, demand picked up, and sales price actually picked up for new home builds. But I believe, again, the reason why new home build prices went up in July is because of this decrease in interest rates, but also builders getting desperate and bringing back buyers' incentives and the fear of missing out, how to do with it. But here's what I wanted to show you. Look, it's already starting, you know, this could be a trend, but this is going up, right? Because the mortgage rates went up. And I believe we're going to have this week and Thursday, the mortgage rates are going to go up again. So keep your eyes on this, because I expect unaffordability or mortgage payments to actually start trending up once again. And look at the gap here between 2021 and 2022. Massive gap. This is a moderate gap right here between 2020 and 2021. This here is unsustainable, though. That's a massive gap. Let's look at the next chart right now. All right, so here's the Redfin Home Buyer Demand Index. Now, this is all over the place, you guys. This is very, very intriguing to me. In my opinion, I think demand's down more than 12%, you know, especially looking at all the data, but it is what it is. So I wanted to point out this. We're only slightly higher than 2020 as far as demand. I believe, you know, once we're going into the fall and winter months, you're going to start seeing demand plummet past 2020 levels. So I think the demand is going to go back under 2020 levels like it was in June. Right here, you can see this was under 2020 levels, and then it kind of went up. And again, in that, in my opinion, was the result of, you know, the remaining buyers in the market that kind of shook loose because of the fear of missing out, buyers' incentives, and lowering of the interest rate. And that's what I'm saying with the reverse trajectory of that trend. But again, it's reversed back. So everyone needs to kind of calm down, refocus on your goals, and chill out a little bit if you have anxiety and you really want to purchase. And here's the thing, I have anxiety. I really want to purchase. I'm up till 2 a.m. sometimes searching my local housing market, trying to find houses. I mean, you guys, I get it. I'm renting. I downsized my family, my children. I hate it. I'm making my landlord rich, but again, it is worth it to me. Even though I hate it, it's worth it to me because I would way rather waste my money in rent than be trapped upside down in my house again. But it is what it is, y'all. Now, in conclusion of reading this data, here's how I want to end this video. In my opinion, we are absolutely in the beginning stages of a pricing and housing market crash. Now, if it's not yet in your area, stay patient, keep watching the data, keep tracking your local housing market, because what happens, it's got to start somewhere, and wherever it starts, it spreads. And I believe that this time around, compared to 2008, this housing market crash is going to be much more widespread than 2008, due largely in part by the mass migration. But other than that, you guys, I really hope you got some value from this video. And if you're out there investing in real estate, I do wish you luck, and I hope you win.